Hey everyone, welcome back to Yuri's Box. In this video, I'm going to look at smart money versus dumb money. If you like this kind of content, consider leaving a like. And as usual, nothing in this video is financial advice. So again, before I start, I just wanted to thank everybody that subscribed, been leaving likes and commenting on my videos. I only started a month ago or so, and I definitely didn't expect things to move this fast. And I just appreciate everyone. I want to keep this video short. And what I really want to point out is something that I see thrown around a lot, especially when it comes down to comparing bond market investors to stock market investors. There's this kind of aura of reverence, really, when talking about bond market and bond market investors, where the bond market is where the smart money is. And if you want to know what will happen, at least in the future, in the near future, look at what the bond market is pricing in. And I'll give you some of my background while I'm at it as well. And what I'm really going to use is a few examples really from this cycle. And I'm going to start from 2022. And I remember 2022 because at the end of 2022, the bear market had happened, all right, and for most of 2022, nothing worked, all right. I started investing and looking at this world in 2020, like every youngster during the pandemic, and what probably set me apart from a lot of people is that I stuck around after the 2022 bear market and really tried to learn new things. I remember I started looking at what's the bond market, how do yields work. I was so young and naive, so much so that I remember precisely the end of 2022 till, let's say, end of spring, really, to the summertime. That was the time where everybody was raging about the recession that we were going to have in 2023. That's when you had articles pop up in like Bloomberg articles saying that we were going to have, economists, 100% of economists predict a recession in 2023. Okay. And I remember that so clearly because I bought into that. I remember buying into that. And one of the reasons I bought into that rhetoric is because I listened to a lot of people talk about, the bond market. And I remember having this, wow, the bond market is pricing in so-and-so. So, I mean, it must be right. But let's look at what the bond market has predicted from 2022 up until now. So again, we have 2022 and we have stocks at an all-time low. Well, there I go. We have the stocks putting in the major low. Okay. In the middle of October. At the same time, just to keep things simple, the 10-year put in, where are we? Right here. Put in a local top. Now, what followed this local top was really sideways chop until the summer. All right, right here. Now, what was going on right here during this time frame? Okay, during that time frame, stocks from October till the summer had rallied, if I'm not mistaken, about, what was that, something like 20, 10, 20, 30%, all right? 30%. At the same time, let's go back to the 10-year yield. You had similar returns, okay? You had more or less, the best of times, you had 25% rally. So you had yields declining. Now, if you recall, if you were in this space, why was the bond market rallying at this point? Okay. And the reasoning behind, yields going lower during this time frame here is because the Fed, but again and again, the Fed during this time frame was still hiking rates. Keep that in mind. The narrative was that since the Fed was so late and had to hike rates in such a dramatic fashion, they were going to break something. And we were going to have a recession because of that. And so we were going to have rate cuts. At this point, the bond market was expecting rate cuts during this, from October till really the beginning of summer. So if you were to look at these two rallies, if you go with the notion that the bond market is where the smart money is, and if the bond market is pricing in something, you better pay attention. Well, then you would have faded the stock rally and you would have bought into bonds. But that's not that well. If you did that, that certainly wouldn't have paid off, because what happened is, of course, we didn't have a recession, and bonds had to play catch up. You had to have yields rise significantly from that point on. Now, again, the stock market had its own, rough patch, but it went on its merry way because we never had the recession. Okay. Now, looking forward, what happened next? The reason why yields kind of topped in October of 2023 was that Powell came out. Now, granted, you also had certain things happening, like Yellen really issuing shorter term debt, really issuing debt at the short end of the curve. So preferring the 2-year yield as opposed to longer dated treasuries. But overall, the catalyst over here was really Powell, and he came out and he said, if inflation cooperates, we'll look towards cutting rates. But overall, we're not in a rate hiking mode. So again, what does the bond market go and do? It prices in rate cuts immediately. All right. We go from 5% on a 10-year to about 3.7. All right. So we're pricing in about 100 basis points of rate cuts at this point. Then what happens? We have inflation being sticky, right? We have inflation sticking around the 3% mark. Let me bring that up so you can see it. Right here. All right. This is Powell's remarks around this time frame here. And this is what inflation does. It goes nowhere. It just stays there, stubborn. And of course, what happens next is, of course, that rates have to sell off. Really, bonds have to sell off, and yields have to spike higher, because we have to price out all of the rate cuts that we were expecting. All right. So at this point, the bond market is saying in April, forget about the rate cuts, man. It's not going to happen. Inflation's too much of a problem. And in the meantime, yeah, the stock market had its rough patch again, like it had in the summer of 23, but it wasn't anything too dramatic. I mean, we're still talking about a 5.5% rally dip, right? Nothing really dramatic at all. And what followed that was, stocks going on their merry way. But as we got into April, if you look back at inflation, that was exactly the point where inflation started to roll over. If you look at, let me bring up the unemployment rate. Right here, you had the unemployment rate start to go up. All right. And it eventually peaked at around 4.3 in the month of July. And sure enough, from that point on, bonds started to move lower. Again, because of the weakness. And so that culminated really in the month of September, when things. September was really a month where everybody was waiting. I remember me included. Really, we were all waiting for confirmation. Right, is the economy falling off a cliff or isn't it? And September really didn't confirm anything. I mean, the data was a bit wishy-washy, but again, not great, not terrible. However, October's data was really positive, and on top of that, you had the Fed cutting rates. And at this point, the bond market was pricing in more rate cuts. Now, granted, we did get rate cuts, but what followed after that is the exact opposite. Yields going higher. All the while, stocks, where are we? Here we are. Yeah, they had, again, their own shenanigans going on. I mean, we had the yen carry trade go berserk in August. We had about a 10% correction. And we saw, because of the kind of mixed data we got in September, another 5% drop. But overall, stocks went up. No problem. And again, what happened next? Again, we get to June, and now the bond market is pricing in the economy is rock solid. Nothing bad is ever going to happen again. And sure enough, what happens? Trump gets in. Fiscal tightening, albeit pretty benign up until this point, and tariffs, which are really disruptive, and we still have to really consider all the effects, in my opinion. But overall, what is my the moral of the story here is that if you believe that somebody holds the key to predicting where things are going, nobody knows that. Not even the bond market. Again, it's something that you hear so much. Even after this, the bond market pricing in exactly the opposite of what happened next. That, again, I just felt compelled to make this kind of video, because I remember when I was starting out, I remember 2022 and 2023, I remember hearing, I don't want to name names, of course, but I remember hearing a lot of, pundits say, you have to pay attention to the bond market. I mean, why would the bond market rallying at this point when the Fed is still hiking rates? Well, maybe we're going to have a recession, and this was one of the biggest talking points for recessionistas in 2023, mind you. All right. So, moral of the story, nobody can predict anything. And granted, the bond market has to, because of its nature, it doesn't have earnings. It has to keep in mind more of the macroeconomic landscape. And okay, we have to keep that in mind. But you just can't ignore history, all right? So far, I mean, this cycle, the bond market has been at best wrong, all right? And the so-called dumb money, all right, where the stocks are, they were right. They've been right all the way. From 2022 on, they were bang on right. And sure, we had our hiccups along the way, but the stocks market has been right. Now, this also comes with a caveat. And the important caveat is that stocks have really they behave in either two ways, one of two ways. Either we're in a recession, and so the world is falling apart, and so we're going to sell off, and so you're going to have something like 2008, COVID, potentially even you might argue about 2022, but that's a topic for another video. 2008, 2000, 1990, and so on and so forth. And so we have to drop. Or we're not in a recession and we can rally. That's basically what stocks do. Stocks go up. That's the reason why if you go about the stock market trying to predict a recession, every year, I mean, it's just not worth it. Even shorting stocks, as in my opinion, I mean, I'm not a fan of shorting in general, long in short. I just buy spot. I'm as vanilla as you can get, but shorting stocks because we're going to have a crash, history shows it doesn't really work. You're much better off just buying and holding stocks. That's it. That's all you have to do with stocks because they go up. That's what stocks do. Unless we have the possibility of a downturn. All right. So I'll leave it at that. You know, I think it's important, especially for newer people, to keep in mind that nobody has the answers. And yes, the bond market does have other things to worry about. And it has to, by nature, really have to consider more of the macroeconomic factors compared to stocks. But even with that, ever since 2022, the bond market has been dead wrong every step of the way. And, when it comes down to dumb money or smart money, so far the stock market has been smart money. We'll see I'll see how things play out. But anyway, I'll leave it at that. If you like this kind of video, consider leaving a like, and I'll see you next time. Bye.